this is Phil and it's your Friday video update. So there's really one subject on everybody's mind right now, and that's interest rates. If you've been paying attention to the market at all, you've heard and seen maybe that interest rates have definitely climbed over the last few weeks. So I wanted to take a quick moment here today to try to give you an education on what's been happening and kind of where do we go from here. So I'm going to put some different charts up on the screen as I'm talking to kind of explain to you what we're looking at. This first chart shows the Fannie Mae 30-year fixed coupon, and it shows, I've drawn two green lines to show you the trend since January 3rd, and you can see that the bond market has moved down significantly. That represents about 250 basis points. Translated into a rate, that's been about 0.5% in interest rate since January 3rd. So remember that if the bond market goes down, rates go up. If we take a wider view, I went all the way back to a 3-year view or 4-year view to go out and look, when was the last time the bond market has been at this level? Well, look, it was all the way back in January of 2014 when the bond market was down at the same levels that we've hit now. I went and looked at interest rates in January 14th, and ironically enough, the interest rate for the 30-year fixed mortgage in January 14 was 4.75%. So it was actually higher than we are now. And I'll explain a little bit more about that in a minute. But I also wanted to kind of point something out to you. People want to know, well, where do we go from here? What does all this mean? Well, this next chart shows that between the two red lines back there, January or July 2013 to January 2014, the last time we were really down low in the bond market, that was about a 6-month window. Maybe if you go all the way back to where it started to fall, maybe 6.5 months. And if you look at this, I've kind of highlighted in these charts, there's thin lines, vertical lines, and they're every 6 months. So here from January 2017 to July 2018, you can look and see what happened in the bond market during that time. And then now from July 2017 to January 2018, it's dropped back down. So if you kind of think about these 6-month windows of time, it might give you an idea of kind of maybe what we could anticipate happening over time, or at least think about it in a 6-month window. Now, the reason why rates were different back in 2014 when the bond market was actually down at this level is that the federal government, the Fed's participation in bond buying was different back then. And now today, the Fed, as I said in previous videos, the Fed has been reducing the amount of bonds they buy and unloading them off of their balance sheet, which has been throwing bonds back into the open market and looking for private investment money to buy those bonds. In addition, I've always said that when the stock market does poorly, it usually helps bonds and therefore rates improve. That hasn't actually happened here lately, simply because there's a greater fear of inflation because the economy is doing much better. So we have a lot of different market forces at play right now. Remains to be seen where we go from here. But I think the big message is, yes, rates have gone up. But the bigger message for you and to your clients is that rates are cyclical. Things do change. We're at kind of the bottom of the bond market right now. And I would look, hopefully, for some turnaround here. Maybe as other market forces and other things kind of shake out, but it really remains to be seen. Rates are still not horrible. They're still historically very low. But I want to just one last reminder. We've brought on some brand new programs, some new adjustable rate mortgages, a 5-5 ARM, a 15-15 ARM, and a 7 and 10-1 ARM, and a 5-1 ARM that are all very, very well priced, and give some clients some other options to lower the interest rate. And for the fixed period of those ARMs, they're just like a fixed rate mortgage, and quite honestly can answer a lot of people's interest rate and payment concerns. So I hope that helps. If you have any questions, please give me a call, shoot me an email. If not, I wish you a nice weekend. Hopefully you go out there and sell something, and I will talk to you next week. Thanks for listening.